What's happening, guys? Welcome back to another Sunday Scan. Hope that everyone had a great week and weekend. We have a lot of great topics to cover in Scan today. We're going to have Nick join us for the main watches and for a lot of market discussion because he's been absolutely crushing it in this market. And a lot of it is just not hanging on to a huge bias, but just trading what's in front of you, using key levels, finding the names that are in play, and then just cutting risk quickly when it's not working out. And so he's going to have a lot of great thoughts that he can share with everybody. And then additionally, we just had a new Trading Takes episode that got dropped with Kyle Williams and David Hanlon, and it's about trade reviews and really the process that can help traders to level up, especially in a market like this of what are you learning from your trades, not just what are you doing with the trade. So definitely check that out. It's a great episode. I just finished it, watching it myself, and I really enjoyed it. So we'll bring on Nick in a moment. We'll go over a lot of great market concepts, and we'll get that started right now. All right, we're back with Nick. Nick, welcome back to Sunday Scan. How you been? You've been crushing this market, right?
It's been a gift. I cannot complain. But yeah, thanks for having me back. It's always a pleasure.
Of course. So yeah, I want to bring you on. You're always great to talk about, being very agile in markets, and especially when things are very volatile. When you can't latch on to a bias, but you rather just have to maybe have a broader picture view, but then day to day feel the action, feel what's going on, and then just locking into what makes the most sense. And I know that when you're trading, you like to stick to names that you're familiar with for the most part. You like names that adhere to good technical levels, things that act how they should be acting around levels. And I know that that's something that Nate was saying he likes about this market too, is that it's been a very technically clean market where if you have a level, if something's supposed to exhaust into it or something like that, pretty quickly whether or not it's acting how it should. So yeah, what are you seeing in this market in general? What makes it such a good market for you in particular?
Yeah, absolutely. I mean, I think that this is just an absolutely incredible market for day traders. I think if you zoom out and spoke to the average swing trader, I think that they're having a pretty tough time in this market. It's just been very tough to swing names either way. I mean, there have been a couple days where you could have taken positions, swung it for the week, and done really well. But in my opinion, this is a trader's market, and uh, we're in a headline driven market, which is definitely important because you can be dead right on one trade and dead wrong 3 minutes later. So it's something that you always have to adapt to, you always have to adjust to. But there are certain names that act just incredibly well in times of volatility. And when I say incredibly well, it doesn't necessarily mean that they're holding really well compared to market weakness, although we do have a basket of those names. Um, but I'm really referring to names that just act well technically, right? So it's like you can draw technical levels on a chart, and basically, I'll use Palantir as an example because that's been probably my top name that I've traded over the past month during this market volatility, and I would say that Palantir has been a go-to for me. Could I have made more money trading something like HIMS or something else that had a 50% haircut, 60% haircut? Sure. But Palantir is a name that I'm familiar with. But more important than that, it behaves so well technically that even on I'm more comfortable with the short side of the trade, right? Especially with Palantir that's trading, I still think like 200 times revenues or something nuts. But you can tell that there are certain levels that it just acts really well off, like 80-90. Yeah, 83-50 was a great level. 85 was a key level. So like you can plot all these levels on your chart, and sometimes they don't really mean much, right? I've seen people use all kinds of different indicators and lines on their charts, and I don't know how much it helps them. Maybe they can explain that better to you. But for me, I like to keep things very simple, and I think that's been the best way to trade this market is just keep it simple, follow price action, don't let your bias get in the way of what you think should happen versus what is actually happening. And Palantir has been acting very well off of that. If the SPY's weak, it's a very easy directional trade with Palantir where, let's say has that like morning pop and then flush out. And then if we're in a downtrending S&P or a downtrending NASDAQ, whatever it is, VWAP or prior key levels from prior days really come into play with this type of name, and you can base a lot of your risk management off of those levels. So on a day that Palantir is fading, I like to use VWAP a lot as my technical indicator, where I know that I'm on the wrong side or the right side. So if I'm trying to short a stock that's above VWAP and keeps coming back into VWAP, rechecking and bouncing off of it, and I'm trying to short that, I'm fighting a trend, right? Because that trend is up. And then vice versa on the downside, if a stock is trending below its VWAP and it has those pushes back into VWAP, stays heavy there, continues lower, we have that kind of like bouncing ball. And that to me is very easy to trade off of because, I cover through key levels. If it continues to act heavy, you can always put whatever size back on you want, especially with a name like Palantir with incredible liquidity. But I also like Palantir because of the range that it provides every single day. It's multi-dollar range. So as long as you stay disciplined and follow your rules and, zoom out and understand what the trend is doing, you can do very well on names like that. And I find in this market, small caps are kind of dead. Like they're not really moving as much as they were, let's say, a couple months ago. So even pre-market, I know a lot of traders that like to trade these small cap names pre-market. And every day I wake up and I see, oh, pre-market dead this morning, pre-market dead this morning. So what does that tell me? It's like we have a little bit of a rotation, and I'm going to focus on where that money is going, right? So like if small caps are dead, there's not much action, volatility there, not much range. I mean, what was it the other day? We had BON, I believe the ticker was, that went from like a few cents to $11 in like 10 minutes. And that was like the first time we had a small cap mover like that in a while. But like even a name like that, like it's just to me not worth it in this market to even look at. Like there's so much range, there's so much volatility after 9:30 on large cap names. So I would say like if you're a small cap trader and that's like your focus, you got to expand, you have to adapt. In a market like this, you're not making any money. You're probably losing money. So, adapting into those larger cap names, Palantir, NVIDIA, Tesla, SMCI, whatever it may be, learning how to trade those names. And I think once you really familiarize yourself with those types of names and setups, they're a lot easier to trade than small caps. So I've really made that switch from trading small caps, obviously avoiding low floats and front side of those types of moves. And I've adapted and made the switch into larger cap names that I think are much more predictable.
Yeah, and Stan and I and Sam were having a good conversation on our like Friday, live Zoom session that we do in IU, and we
Yeah.
were talking about how people who are transitioning some of their trading, maybe not fully, but some of it from small caps to more focusing on large caps. It kind of, how do you go about that process of like adjusting? Because a lot of people are used to 20-30% range on small caps, and then they go to a large cap and it's moving maybe 3, 4, 5%. Back and forth, like something like Palantir. But I think a helpful thing to keep in mind is instead of focusing on just the range, focus on the risk and reward ratio. And so,
Absolutely.
for instance, with a small cap, something might run up to $1 and then fade, 20%, 30%, and back to 70 or 80 cents. And you might be risking 10 cents in the process of
Right.
doing that. With a large cap, you might be risking $1 to try to make $3. And so the risk
Correct.
reward ratio is pretty much the same. And I think framing it that way makes it easier for people to transition, as opposed to I'm waiting for a 30% drop in Palantir, which is not going to come in one hit.
Correct. Yeah, and I think the biggest, I don't know if drawback is the right word, but the things that hold these types of adaptations back from traders that are focused on small caps is sizing. So I think it's very important. Well, sizing is obviously extremely important, right? I mean, to some people, that's number one on risk management. Um, but I think making the transition from small caps to large caps is difficult for a lot of people because you have to completely figure out your sizing. Like on a small cap, you can take I don't know, depending on the stock, a 5,000 shares starter. You can't do that with Palantir. That's not a starting position. But I mean, obviously, it depends on how much money you're trading with, right? But for me, a starter on Palantir would be 1,000 shares. If I'm right, I add into it. If I'm wrong, I size down. If I'm really wrong, I cut it. But I'm working on scaling into winners and scaling out of losses a lot quicker.
Yeah, definitely. And then thinking in possibly, dollar amounts versus just share amounts too is another thing that can help people. So if someone's comfortable taking a 15, $20,000 position or 100,000, whatever it is, then, kind of just going that dollar for dollar from small caps to large caps instead of, having to figure everything
100%.
out.
Yeah,
Yeah.
and I think that's actually a very important point you bring up because let's say on something like Palantir, I take a $1,000 position, right? So like where's Palantir trading now? $86. That's an $86,000 position that I'm throwing in the market to make what? 2K? You know what I mean? So it's like that definitely comes into play. And on smaller caps, that's obviously a lot easier to justify how much money you're putting into it. So that's why I'm very proactive with these larger caps. It's definitely something I need to work on because I can be dead right, but like I just take profit too soon. So I'm up, I think like 112 or something percent so far this month, and we're 2 weeks in. Um, in hindsight, I probably could have been up a lot more, but I don't like to think like that because who cares? Like that's not what happened. It's not reality. So on to the next. I'm trading well. I can't really beat myself up for selling too early or whatever. I think that what I'm doing is working. So I can always get better and I can always adapt to the market and try to work on potentially holding positions a little longer. I swung Palantir long Thursday night. And sold into the gap up on Friday. If I had waited 30 minutes into the open, I would have like tripled my profit on that one trade. So it's definitely something I need to work on with letting winners run. And I think that that's kind of a habit that I took from small caps where, they tend to be riskier trades, so to speak. So I was always very used to, being right and getting out, like it's a hit and run type of strategy with small caps. With larger caps, you got to zoom out a little bit, so like Friday, I think a lot of people saw this coming where, we hit oversold conditions and yeah, obviously that's arbitrary for a lot of people, but in my head and other people that I respect and follow, we were due for a bounce. So a big mistake that I made was just not letting that bounce really play out, and obviously we're always one headline away from your rally getting creamed, which is why I like to be proactive in a market like this where Trump likes to tweet. Tariffs are still very much front and center of markets and topics of conversation. So you definitely have to have a guard up, especially if you're trading either way, long or short. It's headline driven. But on a day like yesterday, Friday, I definitely felt like I could have traded better just because I had the right thesis, and it shouldn't have really been kind of like, oh, I was right on the gap up, so I'm just going to take profit and reevaluate. It was like, no, I was right on the gap up. I'm sure a ton of people positioned short on Thursday as the market tanked, and to me, it was almost kind of obvious that like we'd see a little bit of a bounce. I did think in the back of my mind that, at any point we can be selling off. So I'm always locking in, right? Nobody's ever lost money taking a profit. So that's definitely a reason why I've been doing well in this market, because we have seen so many reversals in either direction. So to me, it's very much, if you're right, pay yourself. If you're wrong, get out, because you don't know how long these moves are going to last.
Yeah, definitely. And I feel like that's a testament to your style of, taking more, smaller profits, smaller moves, but just kind of going after it very consistently, nailing those. And that really adds up, as opposed
Yeah.
to more of a maybe a larger picture trending style, which has worked really well over the
Yeah.
last, a year, 2 years for the most part, where people can have a view on OKLO or on MSTR and just trend it for weeks at a time or a month at a time. It's a very different style and market where it's, maybe something that you've been doing now, maybe that underperformed a little bit compared to the big picture moves in some of the
Yeah.
other markets. But you can see how much when markets change that really dials in and puts you at a huge advantage. And so it's just
Absolutely.
adapting your style to the market to basically just what's the path of least resistance there.
Yeah,
Yeah.
precisely.
And then, we were talking about the bounce on Friday, and we had talked about that throughout the week in IU. And I wanted to talk a little bit about, why that time of the week tends to be a better time to look for bounces, especially during market corrections, during oversold conditions. Why, the Thursday, Friday versus a Tuesday or a Wednesday. And I always talk about this, but you have to think about supply and demand in layers. And, you have layers of demand from funds, from institution, from retail, from short covering, from options, from all these things. And the same happens with supply. And a lot of times when we have a downtrending market, a sharply downtrending market, a big correction, what is happening is that as people are, kind of de-risking the equities, as institutions are leaving, people start to get more and more short. So that's like a layer of supply. And, people are buying puts. And so the options hedgers have to short and everything like that. So it's like all the supply goes at once. And then you get to
Right.
something like a Thursday, Friday, where suddenly all those puts are expiring. So the options hedgers come off, and then people are, overly bearish on it. And so the shorts have to start to cover. And then you have people looking for the bounces. So it reverses. And so looking for those times of the week to really have, those big bounces, as opposed to just looking for them all the time, focusing on those key areas where something could set off that snowball and reverse it. I think that's a huge
Yep.
benefit in a market like this.
Absolutely. And if you zoom out and you take a look at like the past, the prior 3 Fridays where Trump has been pretty active with, tweeting about tariffs and this and that. I believe that a lot of people this week got short Thursday, loaded up on puts, expecting that to kind of happen again. And I think that's the oversold situation position that I was talking about, where you can be dead right. Like the markets can be going lower, but there are mechanics at play in the market that, you know, the market doesn't just go straight down the same way it kind of does go straight up, but when it does go down, it doesn't go straight down. You're going to see rip your face off rallies along the way. It doesn't mean that we've bottomed, right? A lot of times, especially in a bear market, I think, what is it? Almost 50% of stocks, I believe, are still trending below their 200-day SMA, right? So it's like we're still very much in that downtrend. And yes, you will see rallies along the way. Sometimes they can probably last for longer than you expect. But ultimately, I do think that we're in a downtrend. I think it's going to take a while for us to recover on a lot of these names, not just the S&P 500 specifically, but individual names. I mean, you take a look at something like HIMS, take a look at something like, the nuclear names, the Quantum names started bouncing a little bit on Friday, but I mean, those have gotten crushed. So, while the S&P is down, what is it, 12%, 11%? I'm not positive. But you have a lot of names in the market that have just been crushed, right? So in this type of environment, yeah, you're going to see bounces along the way, likely profit taking after that. And in my opinion, we head lower. Um, you know, I don't know how low. I don't have a crystal ball. I'm not going to call a bottom on anything. I'm not going to call a top on anything. I trade price action, and it doesn't matter to me if the market's up or the market's down. I really do like to trade what's in front of me, and I think bias is really what destroys people in the long run. People think they're smarter than the market, and there's that old adage that markets can remain irrational longer than you can remain solvent, and you could be dead right on a trade, dead right, but it just takes 6 months for you to be right, so you're wrong, right? So
Yep.
I really try to take market timing out of the equation. I rarely play options unless it's a trend day for me, a trend day in the market, or I use them as hedges on positions. So like let's say if I take a long into Nvidia, I'm not positive it's going to continue. Maybe I'll pick up a couple puts on the SPY just in case, and sometimes they both hit, right? So that's really the way that I play options. But typically, I try to avoid options because I just don't like timing the market. It's not for me. I think that's its own animal in itself.
Yeah, definitely. And you brought up a good point about, these, market corrections and then the rallies and then just really being familiar with market cycles. And so I feel like for a lot of people who haven't been through, several corrections, and we're not technically in a bear market yet, we're in a correction. But
Right.
for some people who haven't experienced, this type of action, it's like the trend is lower. You usually have institutions pulling out, money is flowing out of equities on a whole. And then along that way, just like you see in small caps, within a broader downtrend, you have these swipes and these clearouts. And what that actually is doing is that as a trend is very clean for a while, people get more and more confidence in one direction. And so that could mean that people pile in more short, more with puts, more with everything. They all lean in when the market looks like it's really going down a lot. And a clear out is something that resets that positioning. So it squeezes out shorts, it clears out the options positioning. The VIX starts to, drop, or like implied volatility starts to drop in the market. And you basically need these like multi-day, or sometimes they even last for a week or 2 weeks, these big resets. And then once you have, basically that positioning reset to more normal levels, but we're still in that broader downtrend. I feel like that's where having those, multiple timeframes in mind and not forcing a bias, but just being aware that during market corrections, that is how it has almost always happened,
Right.
a broader downtrend with big
Yep.
swipes along the way.
Absolutely. And that's why, like, I think when I first started trading, I was just so bearish on everything, and it took several market cycles of steady up, and then these downturns, and then these ripbacks, and then these downturns to really drill the point into my head that, like, yeah, the market can be bearish, but there's going to be rallies along the way. Nothing goes down in a straight line. And I got burned in the past thinking that, okay, it's finally happening. Like 2008 is here, with like COVID as an example, right? And then we had that massive QE. And instead of realizing that, I'm just like, no, this isn't going to save the market. It'll be like a temporary relief rally, before we ultimately continue selling off. Like, this is kind of a big deal. And that didn't happen. So I definitely got my face ripped off in that rally, but ultimately it was a lesson for me. It was that even on major market downturns, there's going to be these rallies along the way. But in addition to that, when the market starts tanking tremendously, somebody steps in, whether it's the Fed, whether it's Trump, anybody with market moving abilities generally steps in. Like, I don't think we're going to see a 1929 level move in the near future or anytime in maybe even our lifetime. Who knows? I don't know. But I just think with with the amount of control that the government now has over the market, yeah, I mean, you have to be cautious. Things are not just going to be going straight down, and you can pick individual names that will go straight down in a market like this. That's tough too. Like even the quantum names, right? Like, great example where they've faded tremendously off the highs. So many people are just riding this down to where they came from, so to speak. Rigetti came from like $2. QBTS came from like $1 something. I can go on and on down the basket, but you're going to have these rip your face off rallies, and this time it's a little bit of what do you call it? And they have a quantum event, I believe, next week or in a week and a half. So there's things along the way that will help save these stocks, that will provide short covering, and ultimately force the stock to be lifted. And that even can cause a short squeeze because people aren't really expecting that, right? These things have been in a downtrend for months or a month and a half now. And the market's weak. You wouldn't have expected QBTS to go up 40% on Friday, RGTI to go up 25%. Like, those moves, what are they? Is it buying power, buying pressure? Is it shorts covering? Like, these are things that you have to figure out. But if you zoom out, there is an event next week. So likely you're going to see short covering. You're going to see people trying to take advantage of that run up into the event. The question is, in my head, is like, I'm short quantum. I've been short quantum. I trade them almost every day around a core position. For those of you that don't know what that means, I'll take a position on something that I think is appropriately sized. And like it won't wipe me out if it has a huge move to the upside. And if it has a huge move to the downside, okay, maybe I missed out on size, but I was right and I made money. Can't complain. So I like to have core positions in things. I guess that would be my bias. I create bias by starting core positions. And if I'm wrong, very easy to get out. If I'm right, it's very easy to ladder into. But it's always on my radar. I can set price alerts, so I know exactly what's happening. I don't even have to watch it on my screen. I just get alerted through IU. And yeah, I mean, you can let these moves play out. Like, I'm expecting these quantum names to continue its move into next week, and that's fine. Like, I'm okay with that, knowing the reason behind it. And the reason behind it is this Quantum Day event, right? And then NVIDIA has this event coming up. So yeah, you're going to see moves like this in the market. That's okay. Like, you can't, you have to realize, why it's happening, right? Like, I've seen a lot of questions on Twitter, like, when people are like, why is quantum ripping? And someone will say, like, because of the event next week. And they'll be like, what event? So it's like, if you're trading these stocks and you're not familiar with their macro picture, I guess you can call it, like, what events are coming up? What did they just release? Like, what releases or announcements do they have coming up? These are all things that you have to think about. So as a day trader, you're doing so much more than just pushing buttons and hoping that you're right. That's gambling. You really have to study. You have to do your research. You have to fully understand why stocks are moving when they're moving. And should you panic out of it? Should you average into it? Or should you just be hands off and be patient and wait for it to pick a direction, more convincingly? So that's just how I like to look at things. Obviously, people have different strategies, but for me, if I take a position, I don't need to be proven right, but I'll trade around a core. And let's say, Friday as an example, Thursday as an example, I traded it short. Friday, I traded it long, and then I flipped short. But I'm doing this all off of a core position. I'm still core short Rigetti, but I can still trade it long to capture the upside. So I think that's important, especially if you have a bias, to be able to just play both ways.
Definitely. And I think that the quantums are going to be one of the most in play themes, leading into next week. And just like we
Yeah.
talked about how when something's in a broad downtrend, it can have these massive rallies and resets the
Yeah,
positioning.
it's just like kind of like a rubber
Yep.
band effect almost, you know.
Exactly. Yeah. Quantum's a perfect example of that playing out right now, where it's, when do the biggest moves actually happen in stocks or in anything? It's when you have a sudden shift of supply and demand. And so, like a short squeeze, it's everyone's bearish. And then all of a sudden starts going the other way. There's covering. So, massive swap in supply and demand. And then after that short squeeze into an event, now you have longs are back bullish. All the shorts have been blown out and everything like that. It flips. And then you can
Yeah,
have giant flushes down.
absolutely.
Yeah.
Yeah.
So,
So I guess that's what I'm waiting for is
mhm.
I'm hands off right now. I have my core short. But because of this run up, I've been focused on, Rigetti, IONQ, but now I can add QBTS, QUBT. I don't have positions in them, but I'm going to keep them on radar now because they've had massive moves running up into this event. And now my goal is to keep an eye on them, set alerts on them, and see what they do after this event. If this is a sell the news type thing, fantastic. If this is an event that actually does go really well and it does get some buying pressure in the names, I'll stop out. You know what I mean? I'll look for a better entry. It's okay. It's okay to be wrong. Most day traders have a 50% win rate and they're extremely successful. Well, I would say most successful day traders have a 50 or lower win rate. And I see a lot of guys with like a 93% win rate and it looks awesome, right? Like they can't do anything wrong. They have the Midas touch. But I find that people with those types of win rates are just not managing risk correctly at all. And their losses tend to outweigh their wins 10x.
Yeah, definitely a good point. So let's get into some of the main watches for the upcoming week. We'll just go through these quickly. Again, this market is very day to day, and so we can have names on watch, but it's really
Yeah,
going to depend. What's SPY doing? What are the big tech names
right.
doing? And that's going to determine. So before we get into that,
Absolutely.
I'll just give the disclaimer that neither of us are financial advisors. These are not buy or sell recommendations. All of this is for informational and educational purposes only. So I'll pull up the chart. And Nick, do you want to get going with some of your thoughts on Palantir to start?
Yeah, absolutely. So what do you have up? The daily on there?
Yes.
So before I get into that, I did want to talk about one more thing, which is baskets. Okay. And I think it is very important for traders. I think, traders that are further along in their career already know this, but to, novice traders, amateur traders, even traders that have experience, but, have different styles, right? So it's like you always have to have baskets of names that you're ready to go to in different situations. Okay. So let's say you're comfortable short selling, you're not as comfortable chasing something long. So when let's say we have a SPY gap up and grind day, for me, that's very difficult to buy into and hold and just kind of let that work. It's much easier for me to play something like VXX or UVXY when that's happening. So I'm for some reason just more comfortable on the short side. I do better on the short side. All the statistics are proven in that direction. So when the SPY's rallying and grinding, I have a very hard time buying into that but I can short the VXX, no problem. So, that's like the index basket for me. And then you have baskets like Tesla, right? So like if you didn't want to long Tesla, there's TSLQ. Nvidia has NVDS. All of these high flyer names that are trading at, MSTR is trading at what's it trading at? $300. If you don't want to trade a stock that's $300, eats up a lot of your buying power. You can't really capture major moves. You can trade SMST. You can trade MSTZ. So I think it's very important to familiarize yourself with the different what's the word I'm looking for? The different, I guess, I don't know,
Yeah,
tools that you
yeah,
can take
variations.
advantage of,
Yeah.
right? Where it fits better into your strategy. So like I think most people think of baskets as like the quantum basket, which contains IONQ, Rigetti, QBTS, what a QBT, whatever, right? Like that's a basket, sure. But I think it's very important to have contra baskets and know exactly what to look for when things are moving. You can take the same trade, but let's say it could be a lot cheaper. You can use up a lot more of your buying power, or it's just a name that you're more familiar with if you like going long or if you like going short. So that's just something I wanted to talk about. I think it's very important for traders to build up those types of watch lists. And when these names start moving, you know exactly what to go to.
Yeah, totally agree. Finding what not only has a good move coming, but what is, most ideal for your system, for your setup, for your read, and then
Yeah,
that's kind of where like that overlaps, and you can get a lot more
totally.
edge in something like that than doing something that's out of your comfort zone.
Absolutely. And I wouldn't consider these like sympathy plays, right? Because they're the same play. Like they move ticker to ticker almost off of, the main watch. But if you're just more comfortable shorting, more comfortable longing, have that basket because it'll help you tremendously.
Definitely. And so, okay, I'll pull up the
Yeah.
Palantir daily. What's your plan for the upcoming week with Palantir? Are you just going to take it day by day? Do you have a broader plan?
So I'm currently sitting all in cash minus a small Rigetti short at this point, core position only. I covered, all the ads or whatever into Friday. Um, I'm watching Palantir this week. I do think the market closed strong. Palantir closed strong. A lot of stocks, closed very well Friday late day. So let's see. I again, like I mentioned, I like taking things day by day. I don't like to kind of predict where the market's going to open up on Monday. I don't know. Nobody really does. It looks like we can potentially have a gap up on Monday based off of Friday's action. And sometimes when we get oversold rallies, oversold conditions, rallies can last longer than just a day, right? So I would say that I would expect the market to continue into Monday, potentially gap and grind. Maybe midday we change course a little bit. But again, I don't have a crystal ball. I don't know. These are just scenarios. But if that happens, I would be looking at Palantir. 88 is a key level on Palantir, and then 90 is a key level on Palantir. So I'm watching these key levels to see if they are rejecting off of them, like getting to them and rejecting, or getting to them, consolidating, and continuing higher. So I'm still short biased on Palantir. I do think valuations are extreme, and in any market downturn, it generally acts pretty well with that. Market upturns, it acts really well with that. So there's just a lot of range and liquidity. I love trading this name. What it does on Monday, I think we probably do get those pushes, depending on where we gap, right? So it's kind of hard to like if I was making this watch list today, I would say, okay, 88 is a key level, 90 is a key level. But what if we gap over those levels, right? So then my whole watch list kind of changes, and my thesis changes as well. So for now, that's what I'm looking for. I'm looking for those types of pushes, grinds higher that ultimately end up getting heavy. So that would be my goal for Palantir next week. I don't know which day that happens. I do think that this rally can last through Monday, potentially Tuesday, and then maybe we get some sort of a sell off into the end of the week.
Excellent. And then what about the quantum names? So I have RGTI up. I know
Yep.
you have a core short against that. Do you have any other plans to trade the like IONQ, QBTS, or are you just going to wait for the quantum event and take it from there?
So with Rigetti, because I have a short position that I'm now a little bit underwater on, nothing too dangerous, but I have about a 1038 average on it. So I mean, I'm on the wrong side of this one on my core for sure. But I'm going to be hands off till the event on Rigetti, and I'll be trading names like QBTS and IONQ those names I'll be trading, right? So, while I do like to trade around a core, because I'm a little underwater on this trade and I don't want it to kind of get out of hand on me, I'm going to be focused on the other plays. Now, while Rigetti could be, let's say, a sympathy to Ionic, um, I still think that Ionic has great range. It's also been a pretty friendly trader with key levels. Like if you pull up, I'm looking at a 5-minute chart on Friday for IONQ, and if you pull this up, you can see, right. So it had that pre-market grind, so we get continued strength. And in the morning, we just completely flush. I mean, not flush. We completely pop, and then we start to consolidate around this 2350 level, 2325 level before we get that next leg up, and next leg right up into 25, comes right back down into that prior support and starts to grind back up into, and then it rejected off of that exact level 2450 where it initially had that downturn. So like obviously this is hindsight, but you can trade this live knowing, okay, I just got long IONQ at this 2350 level because that's where, there was some congestion off the open. So I take a long here. Where would I sell? Would I sell my entire position at 2450? No, I'm not selling my whole position. I don't think like that's the whole move. But I definitely take some off here because I noticed that that was prior resistance. So I sell into that. It comes back down into VWAP, holds, doesn't even breach it. Is a decent level to add back your sell. And then we go right back into 2450, get that rejection. But ultimately, we're bouncing off of VWAP, and VWAP is just acting as complete support. So, you can notice that after 10 minutes and just watching this thing. And obviously, you don't know if it's going to crack support or if it's going to break support. But the point is that once it's holding support and it had a big move like this today, chances are a lot of people are stuck short and not expecting this to completely fade off today. And then once we had that market push into the close, took IONQ with it, and it closed at the highs of the day. But this is just an example of something that's just trending beautifully, almost like respecting all key levels. If it had broken that initial after 2350 and then ran up to 25, if it had broken that 2350 level on the way down, I would have been much more bearish and I would have been looking to short pops versus VWAP. But it held that level, which was a clear bullish sign to me. So again, there's a lot of names in the market that are just behaving very well, even though, they're down a lot or it seems like they're getting wrecked every time a headline comes out. There are names that, you can look for that are just trending nicely. They have relative strength or relative weakness, depending on what you're looking at. But you can trade off of that and you can make a lot of money. You don't have to trade size to really make money in this market as long as you're trading the right names.
Excellent points. Yeah, a lot of great lessons there. Using support, using resistance, using relative strength, using the market cycle, and just taking your wins when you have them. So a lot of great insight there from you, Nick. I'm going to get into a couple of names, starting with Nvidia. So Nvidia has really been a bellwether for the market in general. And you saw this massive sell-off from 140 all the way down to 105, 106 over this last leg of the correction. And I think that that's just been a really good leading indicator for where the market is heading, since that's such a main driver. And now that you have such a large bounce from that, I think it's goes hand in hand with the market bounce. And so I'll be looking at Nvidia to basically gauge what the rest of the market might be doing over the next couple of days or the week, because if Nvidia has some relative strength on the bounce, not necessarily a bigger picture relative strength, but during this bounce it has relative strength, I want to focus on what are the leaders, and then if those start to stall out or putter out, then I can assume that the market in general will most likely be close behind on that. And then
Yeah.
more of like a bigger picture relative strength. Gold crossed around $3,000. A lot of policy uncertainty, the tariff wars, possible like austerity in the government, basically just like slashing spending and everything. And sometimes people don't know where to put money, and so gold
Yep.
can be that safe haven asset for that. So the miners
Yeah.
are a watch for me.
Yeah, and to add to that, China is still holding very well. um, it still looks pretty constructive. And
Mhm.
we have Baba holding up pretty well. We got JD, PDD, FUTU. So these are all names that I kind of feel like have that like beach ball underwater analogy, where once the market does turn, these names can really take off and break some pretty key levels. So the China basket is definitely on my radar. I haven't really traded them much, here and there a little bit, but definitely on radar, because this is notable strength. And even to touch back on Nvidia, if you take a look at Nvidia on Thursday, the market was tanking, and it was every single pop was getting sold off, but Nvidia was just holding up incredibly well. It would fade 50 cents when the market pulled back $2, and then the market popped 50 cents and Nvidia reclaimed the entire move. So, um, Ariel talks about this a lot. A lot of people talk about this, but these are names that you want to look for in a downtrending market, names that are not reacting so strongly to a market pullback, and they're kind of holding up. And again, that goes back to that beach ball analogy where, when you do have that up day in the market, it's like a springboard on Nvidia. And Nvidia was definitely the market leader on Friday. It had the most relative strength. And I could have known that on Thursday, right? So like that's an edge right there, because you can see something holding up really well. And if the market does rebound, NVIDIA should be top of your watch list. And that's your edge right there, is just recognizing that strength and then taking advantage of it when the opportunity sets up.
Yeah, and
Um,
you could do that with either equity. You could do that with calls. Like there's multiple ways to play
Absolutely.
these moves.
Yep,
Definitely.
whatever you're comfortable with. But,
Yep.
just recognizing that relative strength compared to other things, um, and then just taking advantage of it when it comes into your wheelhouse.
Yeah, and then an example of relative weakness is look at this AAL, this American
Absolutely.
Airlines,
Yeah.
during this whole market correction, barely an uptick for it. And so eventually, the cycle plays out where you have such a waterfall move down that eventually you'll hit some kind of support and maybe get a bounce. But I just wanted
Sure.
to have this on the screen to basically show what a super clean unwind can look like as you
Yep.
see increasing volume, as institutions are, rolling out of a name like this. And that's, very different than something like a Baba, which is holding up really well during a market correction.
Absolutely. And to point out something else that people might not be familiar with is, if you take a look at Baba, right? Look at the volume. You have kind of declining volume over there, right? So it's like not like you're seeing heavy selling, but if you pull back up the chart you just had up, right? Like you see that the volume is increasing with the selling. So what does that tell you, right? Like that's a tell in itself. It's people panicking. It's real, maybe institutional selling going on over here, where people want out. Like when I see a stock that's drifting lower but on declining volume, that's kind of a sign for me that, okay, less people are selling, less people believe that we're going lower, and we're probably going to get a reversion trade soon, right? Like I'd be waiting for that. I'd be waiting for an up day, and that's not necessarily where I'd buy. I'd buy on the follow through up day. And again, another lesson I learned from Ariel, but just wait for a follow through day to really start your position, and then that way you have more cushion to be wrong, right? If it breaks those lows, you're wrong, right? It was just a 2-day bounce. But wait for that follow through day, and you want to see the volume pick up when the stock price goes up. You don't want to see volume pick up when the stock price is going down.
Definitely, because that's a sign of the trend increasing in speed and in volume when you see that. And then if you look at something like Root, which has, huge relative strength in a market like this. Just look at, even though that the market itself can be selling off, there's always going to be a spectrum and pockets of relative strength, relative weakness, things that are ready
Yep.
for a trend, things that are ready for a mean reversion. And so, just don't get so locked in on, one basket, one theme. It's like you just have to branch out, look at what's relatively strong, look at what's relatively weak, and then understanding the cycle too. And this name like Peloton, so everyone knows Peloton, and this is a great example of kind of like these market cycles where it trends very cleanly down with the market, and then it is a big short squeeze name because it's so crowded and it gets over. People get overzealous on the downside, and so there's just so many options out here. OKLO, another one you could see such a clean unwind as though speculative money came out, and now it's down to more of a stabilization level. You have some energy headlines, and that's when you can look for those mean reversions back up. So those are basically the names that I wanted to cover for Scan this week. Again, most of the action is day to day, but just being familiar with the different types of stocks that are out there and then zoning in on what works for you.
100%. Yep. And again, I do think, even if we do get a rally in the market, Monday, Tuesday, next week, whatever it may be, I still think that there's just a ton of overhead supply that we have to work through. And it's going to be tough, like people that are thinking that we've bottomed and, starting to get bullish again. I do think you have to have your guard up, right? Like it's not just going to go straight back up the same way it's not just going to go straight back down, right? So I'm thinking that we're probably going to see a little more chop in both directions. And that's not to say that you can't take advantage of that. I mean, that's volatility, right? So you just have to know what names to go to. For me, that would be names that I'm familiar with. So I already have key levels just completely ticked into my brain already, and I don't even have to think twice about it. But again, something I'm noticing in this market is a lot of small cap traders struggling. Like screw this, I can't figure this out. This is such a tough market. It's like, well, adapt, right? Like what do you do when there's no more small game left? You hunt bigger game. You know what I mean? Like if you're viewing day trading as like hunting for best setups and all the small game is gone, you can't hunt rabbit or whatever your go-to was, switch to deer. So it's like you always have to be adapting in this market, and what's working right now, at least for me, are the larger cap names, many of them overvalued or in that direction. Like if you wanted to fade the nuclear names, you could have just made your year in a month. So it's really just about focusing on the right sectors, the right themes, noticing relative strength, the relative weakness, and focus on that. Don't spread yourself too thin. I see so many people, even in this market, where you can trade 1 to 3 names a day and make way more than your daily average if you trade well. And then I see a lot of these people that are focusing on like 10 small caps. Most of them are red, and it's like, why? Like I feel like you can just focus on 2 or 3 large caps, make the same amount of money, if not more, with way less risk and way less just randomness with these small cap type names. So again, it's a key point that I like to drill, but trade what you're familiar with. Familiarity is one of the strongest human instincts, and we make mistakes when we start trading names that we're unfamiliar with. My biggest mistakes have come from trading small caps. Why? Because generally all I know is the ticker. I don't even know the company name. I don't know what they do, but I'm just trading the price action. And for me, it hasn't worked as well as making this switch that I made.
Well, excellent. I think you're a great example of the kind of that switch from more small cap focus to more large cap. And I think a lot of people, during the cycle might be exploring making that switch as well. So, Nick, great thoughts as always. Thank you for coming on Scan, and I will see you in the room in the upcoming week. So take care.
Absolutely. See you Monday. Thank you, Chris. Appreciate it.
Of course.
Have a good one.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.